Welcome to Tikona Capital FinServe's Market Outlook for October 2024. I'm excited to share our comprehensive analysis of the recent market correction, the emerging signs of recovery, and the strategic opportunities we see ahead. At Tikona Capital FinServe Private Limited, your investing co-pilot, we provide comprehensive wealth solutions for working professionals, HNI clients, and family offices. Our philosophy centers on creating finite solutions in an environment of infinite financial possibilities. Important disclosure: investments in securities are subject to market risks. Please read all documents carefully before investing. This presentation should not be considered as investment advice. Please consult your financial advisor before making investment decisions. Past performance does not guarantee future results. For information and detailed disclosures, visit our website at tikonacapital.com. Market corrections are inevitable, but timing them is impossible. Historical events like the 1992 scam, dot-com bubble, 2008 crisis, and COVID-19 show that while sharp declines occur, markets have consistently recovered, rewarding long-term investors who stay disciplined. The 1992 market manipulation scandal exposed systemic vulnerabilities but ultimately led to stronger regulations and SEBI's empowerment, creating a more transparent and resilient market framework that benefits investors today. The dot-com crash taught valuable lessons about speculative excesses. While Indian tech stocks suffered initially, the crisis forced a focus on fundamentals, paving the way for the sustainable growth of India's IT sector. The 2008 crisis demonstrated global interconnectedness but also India's resilience. Aggressive RBI intervention and government stimulus helped the economy recover within a year, showing the importance of prompt policy response. The pandemic caused unprecedented economic disruption, but massive fiscal and monetary support triggered a strong V-shaped recovery, proving that well-timed interventions can stabilize even the most severe crises. As we enter the final quarter of 2024, let's assess how global developments and domestic fundamentals are positioning Indian markets for the months ahead. The global economy. US economy shows mixed signals with 143,000 jobs added in September, the highest in 3 months, indicating labor market resilience despite political uncertainties and demand concerns. The Fed's 50 bits per second rate cut in September signals a shifting monetary policy landscape. Further cuts appear likely as inflation concerns ease and growth priorities take center stage. Beijing's stimulus measures have sparked a market rally, attracting foreign and domestic investors. However, sustainable recovery depends on structural reforms beyond short-term interventions. Oil prices are rebounding from September lows due to geopolitical tensions, creating uncertainty for import-dependent economies like India while benefiting energy exporters. Indian economy. India's demographic advantage, digital transformation, and entrepreneurial spirit create a powerful growth engine that positions us uniquely for sustained economic expansion. India's growth trajectory remains robust with 6.5% annual expansion expected till FY29, reflecting strong fundamentals despite global headwinds. GST collections have stabilized after April peaks, while manufacturing PMI remains above 50, indicating continued economic expansion though at a moderated pace. High capacity utilization and sustained government capital expenditure are creating ideal conditions for private investment revival across infrastructure and manufacturing sectors. Production-linked incentives totaling 2.7 trillion rupees across 14 sectors are strategically positioning India to capture global manufacturing opportunities, particularly in semiconductors and electronics. With over 100 unicorns created in the past decade, India's startup ecosystem demonstrates remarkable innovation capacity, driving job creation and economic diversification. Manufacturing remains the critical differentiator between nations that graduate to high-income status and those stuck in the middle-income trap, making India's focus on this sector strategically vital. The evidence suggests this strategy is working. India's export market share is projected to double to 3.5% by 2031. Sectors like engineering and electronics are leading this charge, validating our manufacturing-led growth model. Systematic addressing of infrastructure and regulatory bottlenecks is making India an increasingly attractive alternative in global supply chains as companies diversify beyond China. Markets in September 2024. Small-cap indices led September's performance, followed by Nifty Next 50, showing renewed investor confidence in broader market opportunities. Metals emerged as the best performer for the month, while auto and PSE sectors maintained their strong year-to-date gains, reflecting cyclical recovery trends. Chinese and Hong Kong indices reached record highs driven by government stimulus, outperforming other global markets during the month. Foreign institutional investors increased their Indian exposure in September after August's slowdown, indicating returning confidence in India's growth story. A record 37 SME IPOs launched in September, demonstrating vibrant entrepreneurial activity and strong investor appetite for new investment opportunities. Nifty 200 Alpha 30 and Momentum 30 strategies continued their outperformance on a yearly basis, highlighting the effectiveness of factor-based investing approaches. The mutual fund industry continues its expansion with over half of all investors joining in the past 3 years, and sectoral, thematic funds seeing particularly strong growth. Banking and financial services funds led monthly performance, while consumption-themed funds outperformed other categories, reflecting sector rotation trends. Long-duration debt funds delivered the best returns as rate cut expectations grew, while silver-focused hybrid funds gained traction among investors. Opportunities or market outlook. Corporate profitability relative to GDP has reached a 15-year high, providing strong fundamental support for equity market valuations. Rising profits combined with declining debt levels have created the healthiest corporate balance sheets in years, enabling increased investment capacity. Tax filers have grown at 4.4% CAGR over 5 years, demonstrating successful formalization of the economy and expansion of the tax base. Equities, share in household financial assets has grown 2.6 times in the past decade, yet remains below global averages, indicating significant growth potential ahead. Housing sales are expected to grow at 10% annually with low inventory levels supporting price stability and sustained growth across major cities. RBI's foreign exchange reserves approaching $700 billion provide a robust buffer against global volatility and enhance macroeconomic stability. With the Fed beginning its rate cut cycle, the RBI is expected to follow suit by Q4 CY24, providing tailwinds for growth-sensitive sectors. This supportive environment is feeding into earnings. Strong growth expectations across sectors make Indian markets attractive, with several industries projected to deliver a healthy 10-20% APES growth. Nifty earnings estimates continue to outperform historical trends, supporting current valuation levels and future market performance expectations. 6 structural themes will drive wealth creation: globalization through manufacturing, rising consumerism, economic formalization, clean energy transition, financialization of savings, and technology adoption. As the Q2 earnings season begins, investor focus will shift to corporate performance and management commentary for direction on future growth prospects. While markets may experience periodic corrections, India's strong macroeconomic fundamentals, policy stability, and growth trajectory support a positive medium-term outlook. Financials, specialty chemicals, and its sectors present attractive risk-reward profiles at current levels. Nifty 250 thesis reflects long-term conviction in India's potential. A disciplined approach focusing on quality companies and appropriate risk management will be key to navigating market cycles successfully. At Tikona Capital Finserv Private Limited, we believe in creating finite solutions in infinite possibilities. Our triangle logo represents filtering out unknowable edges from the ultimate circle of market uncertainty. Founded and led by Sumit Poddar, our team is committed to empowering customers to invest in high-quality businesses and build long-term wealth. Connect with us at tikonacapital.com, follow us on LinkedIn, YouTube, and Twitter. Thank you for watching, and remember, invest with conviction, build long-term wealth.